Hello and welcome to the LA Venture Podcast. We're David Waxman and Minnie Ingersoll, partners and investors at TenOneTen. We've watched Los Angeles grow from a sleepy tech backwater to a bustling mecca of startup opportunity. Through conversations with fellow investors and a few other special guests, we'll deliver an insider's view of the LA tech scene.
Today's show is sponsored by Brex. Brex is a credit card built specifically for venture-backed businesses. Brex does not require a personal guarantee. They have a really slick expense management that I personally appreciate. And Brex has a special deal for LA Venture listeners. Go to brex.com/LA Venture to get waived credit card fees for life. Thank you, Brex. I'm super excited to have Adam Struck here from Struck Capital. Genuinely, I think you have been flying a little under the radar here, so I'm especially excited to hear your story because you sort of under the radar did a fund one that really crushed it, and now you've raised a really large fund two, or raising a really large fund two, so you're going to be a huge force in the LA ecosystem. I know you've got all these Forbes under 30, all sorts of great accomplishments, and I'm excited to learn more.
Thank you so much. Really excited to be here.
So we're in Adam's offices here in, what part of town is this?
So we're in Santa Monica, technically. Yeah.
Almost in Santa Monica.
Yeah.
It looks pretty new around here. Did you just move in?
We moved in around 4 months ago.
Great. And how long ago did you move to LA?
Yeah, so I've been here for around 5 years. A lot of people, think I was like a genius for moving here. The real impetus for me was being in Manhattan and getting frustrated that sort of every time I wanted to cover the West Coast, it would be on my quarterly trip. Deals that I would talk about would be dead by the time I arrived. My wife and I actually met at a Northwestern University, and my wife studied theater. She's a level 5 improviser and does a lot of comedy, and she really wanted to move over here as well. So we literally just got to a point where our lease ended in Manhattan, and then we Airbnb'd for 3 months in the Hollywood Hills. And now this is where we're living forever, and this is where our roots are. We have a 14-month-old, and we love this ecosystem.
Wow. So tell us a little bit about yourself. I don't think, I don't know much about your background other than the highlights.
Yeah, so I was born in Johannesburg, South Africa. I lived there for 8 years, then I grew up in the States in Boca Raton, Florida. I went to Northwestern University, did the Kellogg undergraduate certificate program, met my wife there. Then she moved to Manhattan to pursue acting. I went to Georgetown Law. Then I was an M&A private equity attorney at Kirkland & Ellis in the New York Corporate Practice Group. So I know how it is to bill 2,600 hours and work like crazy. I realized really quickly that I was sort of on the wrong side of the proverbial fence. And my brother, who's 7 years older than me, he's a serial entrepreneur in the CPG space, was starting a company called Long Island Brand Beverages. So I took that as my leap, my leap of faith, and I joined him as a co-founder and board member. My mother was crying when I did that. The thesis of the company at the time was to basically own everything that has to do with Long Island iced tea. We were very much influenced by Bethany Frankel and what she had done for Skinny Girl. So that was initially what we wanted to do, was really sort of create a high-end Long Island iced tea cocktail that you could just open up and drink right away. We quickly realized that the slotting fees can kind of kill any company when they're starting. You have to have serious scale. And then we got an opportunity to essentially expand significantly by being in a lot of vending machines along the Eastern Corridor. So we then pivoted in real time because you can't put alcoholic beverages in vending machines. And we chose to actually then sort of do something in the non-alcoholic space. So we wanted to take advantage of, sort of the cultural affinity associated with Long Island iced tea, but actually make that in a ready-to-made, iced tea drink that was non-alcoholic, that preserved the integrity of the tea. And we did things like use reverse osmosis filtration and cane sugar instead of high fructose corn syrup, and it was organic. And I can talk more about that if you want to, but we experienced rapid success from that. And then my brother, once we sold that company, my brother then went on to start a company called Hungry Root. He's raised a bunch of money from...
I totally want to ask more questions about Long Island iced tea.
Okay,
I'm super interested in that.
Sorry, I jumped too much into it.
You are a fast talker. It's awesome. For anyone who's listening on like 2x speed, it'll be impressive. But so just tell me a little bit about getting distribution for something. This is not my space. Slotting fees these are the fees that you pay to retailers to get your beverages on the counter.
Totally. Yeah. And essentially, you want to try and get in with the big East Coast distributors, but it's very hard to do initially. So essentially what you end up doing is creating a sort of grassroots team of independent contractors that can go to stores and do things like, have end caps, do tastings, and you're really sort of working store by store by store. It sounds very inherently not scalable and not something that as VCs we like to talk about, but we actually realized really quickly there was a nuance that I think you would never learn from business school. You would only learn by just getting your hands dirty and really battling in the trenches. We would find that when we would talk to individuals that own stores, maybe they controlled 2 or 3 or 4, but when it came to their uncle, their brother, and their first cousin, they actually ended up controlling like 30 or 40 stores. So that allowed us to sort of do what we would call true, they instead of being sort of single stores, they became SMBs, and that allowed us to sort of expand very quickly. In 3.5 years, we got into 7,500 mom and pops. And then after that, we got into Costco, ShopRite, 7-Eleven. I then had a really good idea to petition the USPTO for the trademark to Long Island iced tea, which nobody actually owned. It's a very difficult thing to do because you have to convince the USPTO essentially that people identify the name Long Island more with your brand than the geographic location. So the standard is obviously very high. But, if you do enough field testing, you can sort of get past that proof point. And then essentially what the USPTO tries to do is they'll grant you the trademark, but they try and limit it as much as possible. So we got it in sort of the, ready to drink, non-alcoholic sort of CPG category. But when that happened, we got a lot of press. And there was an individual named Edward Cullen who ran a middle market private equity firm called Cullen Investments. He's actually a billionaire from New Zealand, was very attracted to our stronghold along the Eastern Corridor. And very opportunistically, he bought us out completely. He then combined the company with a few other assets and actually took it public on the NASDAQ. So it was a really, really interesting situation. I went from big law attorney, really working my butt off, to still working my butt off, but this time for myself and built something that my brother and I are really proud of. And then my brother really continued that entrepreneurial spirit, starting a company called Hungry Root. He closed like maybe 8 months ago, like $25 million from Lightspeed. He's got Jeremy Liu on his board. I went a completely different direction, started aggressively structuring special purpose vehicles. I felt that with operational and legal expertise, early stage venture capital would be a great place to great place to play in. Working with young founders, helping them establish product market fit, and then sort of most importantly, sort of really being with them at that inflection point where we're trying to establish what we call that blueprint and muscle memory to Series A success. So I wanted to prove to myself that I could do it. I wanted to sort of establish myself, as a fiduciary and generate goodwill with a lot of people. So I started the Struck Capital brand, started doing SPVs, and the rest is history.
Can you tell me more about SPVs? I feel like I should know a little bit more, but in terms of just the way they're set up and how yours were set up?
When I would find a deal, I could very quickly draft the subscription agreement, the operating agreement, structure the actual SPV, which is really nothing more than an LLC. You can do a manager-managed LLC, or you could sort of structure it like a mini fund where you could have the GP entity being an LLC and then the LP where all the investors come in. But essentially what you're doing is you're very opportunistically fighting your way into a deal. Then what you would do simultaneously is create like a 30-page institutional grade deck on the deal, and then you're really playing the role of convincing people to come into the deal. You're also promising the founder that when closing comes, I promise I'll come in for around $500K or $1 million or whatever it is. It's a lot of things have to come together at the right time. But we did a ton of them. We did 18 SPVs in like a 12-month period, and there was not one time that we told a founder we were coming in for X amount that we didn't hit that or surpass it. So I think in this game, reputation is everything, and definitely took some risks, but they paid off.
I agree about reputation. I'm really curious how you broke in at the very beginning from moving over from Long Island iced tea or Long Island beverage to getting into your first deal?
I think it's really just about having the right network and convincing people that you can be value add. And I think at the end of the day, if you're convincing, and I do think I tell my wife tells me this all the time, I'm in the right industry for sort of what my skill sets are. I know Ida, my partner, told you that I'm a strong debater, and he's right. I can get on the phone and really sort of debate my way through things and convince founders to, allow me to really try and get into deals and then sort of put up some sweat equity. And it's funny, it wasn't that difficult. I really encourage a lot of young investors, if they want to generate a track record, to go the SPV route. David Blumberg from Blumberg Capital is also really inspirational to me. He also started with a bunch of SPVs, turned into a bunch of capital, and now he's done a lot. So I think the precedent was set, and that's the path I took.
And some of those were big successes. Postmates, I know, was in there. You just mentioned Wonder Mobility.
Nutanix?
Yeah, Nutanix. Yeah, those are really good ones. So Nutanix, I remember being at Kirkland & Ellis and using Citrix to access my desktop remotely. And, the partners at Kirkland & Ellis will have you access your desktop remotely wherever you are. I don't care if it's New Year's or Thanksgiving. And what Citrix actually is in sort of the infrastructure stack is it's called like a hypervisor. So it's creating a sort of virtualization of your desktop. But what I realized was sort of legacy infrastructure, network, compute, and storage were sort of, almost like the equivalent of having your brains, your kidneys, and your lungs in 3 separate bodies instead of one. So that created a lot of lag, which is something I was dealing with all the time. You have a partner yelling at you and you're on your laptop trying to have vacation and it's not working because there's a lot of lag. And Nutanix and a company called SimpliVity created what's called hyperconverged infrastructure, where essentially they took network, compute, and storage and put it all together into one box. And what was really interesting with Nutanix was you could sort of scale box by box, whereas with legacy infrastructure, you either had to go with something small, then outgrow it, or go with something really big and then grow into it, which is just not efficient. So for Nutanix, I had followed the company, very seriously. I had known that Blumberg Capital led the Series A of Nutanix, and then I was able to very opportunistically get in through a tender offer. There was an executive that wanted to sell some shares, and I'd convinced the right people that I could add some value, and that's how I got in in 2014.
Right, and now the company's public, right?
Yeah, they're public. Rode it all the way to IPO, and I remember in the presentation that I created, I predicted that one of the large players like Cisco would try and buy them, and Cisco actually tried to buy them for $5 billion like a few days before the IPO. The board said no, which I don't know if that was a good decision or not, but yeah, Nutanix is a leader in the hyperconverged infrastructure space and was a huge win for me as a young investor.
Got it. So you went from the SPVs, which was a successful route for you, into creating both a fund one for Struck Capital, but also this blockchain hedge fund. And I think one of the reasons I was excited to interview also is I think some people who don't know you well do associate you with that blockchain fund. So yeah.
Yeah, and I was going to say, there's just some confusion as well because Long Island iced tea, after you left, became Long Island blockchain. I think some people muddled that all. I certainly did.
Yeah. So what I'll just say is, for me, in terms of the long blockchain situation, that was a little frustrating for my brother and I, because from our perspective, we built a really strong company. We sold it. We had nothing to do with the company. I think we had been out of it for around 2 years or even 3 years before that whole thing came out. They, for whatever reason, were flirting with a sub $100 million market cap on the NASDAQ and decided to sort of take advantage of the craziness that was surrounding blockchain at the time. And even though they held no blockchain assets, they called themselves long blockchain. I remember waking up, I know where I was in my house, to 714 emails. All my buddies in New York were like, what the hell happened? And I said, honestly, I have no idea, because I sold the company. But yes, that did happen.
There were some funny onion type headlines from that.
There were a lot. I think the stock shot up 5, 6, 7, 800% in 24 hours. But I think people very quickly realized this was more of a gimmick because they held no blockchain assets. So yeah, I'm not such a fan of that decision. But generally, from our perspective, we pride ourselves on sort of being at the cusp of core technology innovation. And I think whether you're bullish on blockchain or not, or cryptocurrency or not, you still have to accept that blockchain in and of itself is a new paradigm. My partner, Ida, was a very, very early adopter of blockchain and cryptocurrency, buying Bitcoin, in around 2014, really close with, a lot of the guys that ended up starting Polychain, et cetera. We had a company that we sold to Bittrex. It was an SPV investment of ours. Bittrex is one of the largest cryptocurrency exchanges in the United States. So when that acquisition happened, a lot of people contacted me and said, hey, you clearly have some information asymmetries in the space. What are you up to? What are you doing? And I felt really good about where Struck Capital Fund 1 was at the time. I didn't have my 14-month-old daughter yet either at the time. And I was like, hey, let's be opportunistic and let's do it. The next thing we knew, we were able to put a very significant amount of capital together, and Crosscut Ventures specifically, which is the largest seed fund here in LA, actually amended their LPA to turn themselves into a pseudo fund of fund to invest in us. So I think that's why in the sort of LA ecosystem, we very quickly went from under the radar industry agnostic seed fund to blockchain people. From my perspective, we still have our blockchain fund open and it's doing really, really well. And I'm still very bullish on the ecosystem. But just generally, I really enjoy vertical SaaS. I enjoy, broader fintech. I enjoy consumer. I obviously have a passion for CPG as well. So, we didn't want to sort of limit ourselves, but that is a fund that we actively manage. And Ida specifically takes a really, he really is on the front lines when it comes to that.
Got it. So just tactically, you're focused now on Fund 2 because I saw you had your first investment in Fund 2.
Yes.
Ida is a partner here as well.
Yes.
And then you've got Greg, who I actually just met.
Correct.
And Ida has a particular expertise in blockchain. Am I?
Yes, correct. He can literally talk circles around me when it comes to blockchain. And I think most people.
So how should founders think about you when they're thinking about all the investors in LA and who they might take money from? Why would they think, I'm going to go to Struck?
Yeah. Listen, obviously I'm biased because I'm obviously a fan of my fund. But I think from my perspective, we talk about more sweat equity per dollar invested than anyone out there. I'm not the most talented person in the room, but I literally grind myself harder than most. I think Ida and Greg think I'm crazy, and maybe I am. I tell founders that when they take term sheets from us and we're leading rounds, I don't care if it's Telegram, WhatsApp, WeChat, iMessage, whatever it is. I'm literally available 24/7, and if I can't figure something out, I'm well networked enough to find somebody else who can. So, we really put the onus on ourselves when we're doing diligence on deals. I find that a lot of VCs are very me-centric. It's how do you return my fund? How do you make me money? Obviously we do unit economic analysis, competitive landscape analysis, TAM analysis, founder analysis, but we also really heavily diligence ourselves. We want to be able to show some serious strategic value during diligence. And if we believe that if we can demonstrate that, it sort of creates network effects where our term sheets will get accepted at lower pre-money valuations and we'll sort of turbocharge these companies the minute we invest. So, again, I'm very biased. I would invite you to talk to some of the founders.
How much of your investing is here in LA versus other geographies?
Yeah, so we're lucky enough from Fund 1, to be in deals like Joymode, which I know you guys are as well. We led the seed round of ScratchPay, which just closed a $15 million Series B from Mars. We're in a deal called Mythical Games that's about to announce a really large Series B. We've got another company called Pay Forward that's also about to announce a big event. So we've got a lot of LA deals, but I think from Fund 1, the goal really was to sort of be co-investors and just be in a situation that we can prove to ourselves that we can invest with the best funds in the world and go after, any geography. Now for Fund 2, the goal is to lead rounds. So we believe that when it comes to sort of doing something at scale, that cadence is going to be easier to achieve when you're actually talking to LA companies, because it's harder for me to convince a company in New York, that they should take my term sheet as opposed to, a fund like Lehrer that is in New York or Thrive or whatever it is.
And so you're generally leading rounds. Now, Fund 2 is bigger, so you're leading rounds with $1 million, $1.5 million?
Yeah, so our goal is to get to $75 million for Fund 2. If we get there, it would be 25 portfolio companies, $1.5 million checks, deploy $37.5 million, and save the other 50% for follow-on. If we get to 50, if we stop it at 50, then it'll be $1 million lead checks and allow us to be collaborative.
Got it.
Very
do you worry about that? If you're at 75, that you won't be able to collaborate as much with local people, and you'll have to win deals rather than win a part in deals? I think seed rounds, if it's a $3 million round, I think there's definitely room for you and funds that you enjoy working with, and TenOneTen is definitely one of them.
Do you have, your background's CPG, do you have Do you have focus? Do you have particular sectors you really want to?
Yeah, it's super confusing for people because, yes, my background's CBG, but I consider my brother the CBG guru. I just consider myself someone who was lucky enough to be able to wear a lot of hats and just sort of grind my way into some semblance of success. I really enjoy sort of fintech, like neobanks. I enjoy vertical SaaS. We've done a lot of consumer deals as well. We truly believe that we're an industry agnostic fund. I'm petrified of sales cycles in healthcare, so we don't usually touch that, and we're not doing much like biotech. But yeah, we if it's a strong founder, like we want to see the deal, and if we can add value, we're going to want to get involved.
Have you ever walked away from a deal where everything looked great, but you're like, why are we at the table? I don't know how we add value.
Yes, definitely. Like when we talk about sort of in our CRM moving deals through the pipeline, a big aspect of sort of that rubric and that scoring methodology is sort of how strategic are we, and there's not a lot of time in the day. So honestly, if we can't really see a path to us being very strategic, it's probably not going to make its way through the funnel to begin with. So I think it's rare for there to be a situation where you're like, I've gone through the whole process, everything's perfect, but like we're just not strategic enough. We really try and tackle that up front.
Actually, I want to go back to just you raising fund two.
Yeah.
And there were two things that stood out to me. One was maybe Greg said this to me, but that you're a uniquely young team of, you're a young partner to be raising a big fund. And also on your website, it said we support young founders providing core technology innovation.
Uh-huh.
Is that a very strategic place you're trying to, thing you're trying to carve out, or?
Yeah, I mean, it's tough, right? Because youth by its very nature is ephemeral, so we don't want to push that too hard. And I feel like I'm getting older all the time. But what I will just say is I think venture capital is a really unique asset class, where that sort of that Gen Z that's building from their high school, their basement in high school, their college dorm room, whatever it is. There's just a certain language that we can sort of speak that I find more legacy funds or GPs cannot. Now, at the end of the day, I think if you're running a fund that's been around for a long time, it makes sense to just add youthful individuals to your team, and then I think you can get across that, get over that bridge really quickly. But just generally for us, we do like to sort of say that we're young and we're aggressive and we'll out hustle and we'll outwork. And we truly believe that. I don't like to generalize, and I'm not a fan of ageism by any means, but venture capital is a really unique asset class. I think if you're trying to start like a law firm or even in private equity, those nuances sort of aren't there. But in VC, you've got young founders doing incredible things. So we sort of want to tell them that, listen, we are young enough to know you, but old enough to sort of lead you. So we do like to sort of play that up while we still can.
Do you think that lends you to a certain kind of deal? Like, tell us about Nutanix. Were they young or?
No, they were older. But I mean, Pay Forward, the founders were older as well. It can go both ways. I definitely don't think that. Again, if a founder's over a certain age, we're not going to do a deal. I would never say that. But what I would say is, on the flip side, maybe there are deals that we shouldn't have won that we did because we can just really get close with the founders and like make them feel like it's family. And what we kind of tell them too is, when you're at the seed stage, you're sort of like in high school. My goal is to get you into the best college, right? I want to get you into Stanford. I want NEA to lead your Series A. So we explain to them that you're going to get those crazy logos at the A round. In the seed round, you sort of want to work with people that you're very comfortable with that understand you. And I do believe that. I think that has helped us win deals.
And are there any particular A-round firms that you like to work with? You mentioned NEA a couple times. Yeah.
So Ida, did a few years at NEA, and we love Forrest Baskett. He's an advisor to the fund, and just generally they sort of scrap their seed program. So we like to consider ourselves sort of scouts for them in the LA ecosystem. Love Rick and all the guys over there. Obviously, we were a very big fan of Kraft as well. I think David and Bill have done a really good job just sort of expanding over here. We love Michael Tam. He's someone that I've known for a long time, and I consider him a personal friend. Just generally, I think for us, there's a lot of really strong Series A funds. They're not just in Silicon Valley; they're here as well. And we love when we sort of can contrast those initial boardrooms to sort of those boardrooms after we have those Series A machines behind us. And there's a lot of funds that can add that level of value.
So anything unique that has come across your desk or that you've been doing?
Yeah, I mean, I just think for us, we bring up like the blockchain fund, which for some people it sounds like unfocused, but if you sort of understand our ethos, we really will do whatever we need to do to sort of get a deal done. One thing that really sticks out to me is for Scratch Pay, which is a deal that I really love because it's really mission driven as well. You're providing mobile first. It's an LA deal. They just closed a big Series B led by Mars Pet Care. You're doing mobile first point of sale financing in the veterinary care space. So essentially, you're allowing individuals. You rush your animal to a hospital under exigent circumstances, and they say we can save the animal's life, but it's going to cost $4,000. The average person who doesn't have that cash or credit available has to euthanize the animal, which is destructive to the family and the animal, of course. And Scratch really puts them in a situation that, through like a Plaid integration, we can get their cash flow based data, we can pull up their FICO score, we can ask 10 questions, and it's highly predictive of whether or not they're going to charge off. And if we approve them, we can give them a loan, and they can get that same UI UX as like Uber, where you just basically can walk out. So what I love about Scratch is, they're making good money, but there's a true mission there. We've done thousands and thousands of procedures. We're saving animals' lives. And for that deal, John Keatley, part of the C-suite of Green Dot, and then he went to Klarna, and he's really accomplished. And I remember being introduced to him by Tim Greenleaf, who's a 17-year board member of Green Dot, and he's one of our venture partners. And John was like, Adam, really like what you're doing, love your hustle, love your energy, but I've got some really big players that are trying to do this deal, and I'm just not sure there's room for you. And then what I realized was I was like, you need venture capital for OpEx, but you also need a credit facility. You're a fintech company in the loan origination space, so you need it. And he had actually gotten an offer from Leonard Green's, the charitable arm of Leonard Green. It was a $12.5 million facility, 16% APR with some heavy warrant coverage. And I was like, I don't care about the warrant coverage. I really want to do this deal, and $12.5 million is not enough for you. I think you need like $25 million. And I called a buddy of mine, Blair Silverberg, who does a lot in the debt space, and I said, Blair, I'm showing you this loan tape. I really want to do this deal. The way that their drawdown schedule works is they're drawing the capital over 12 months, so I'm confident I can raise the money, but I want you to backstop me in case I can't raise the money, because I never want to be in a position that I have to tell John that you went with me and I couldn't give you the capital to expand your business. And we actually ended up beating out Leonard Green and winning that deal and, sort of leading the seed round. So I just think what's sort of weird about us, and I don't think it's weird, I think other VCs are weird, is like, why don't people think outside the box and do things that are different? For us, like, we really want to win this deal in the fintech space, so we're going to raise an SPV and give them a credit facility. We think there's a real opportunity to do something in blockchain. Well, we're going to put together an open-ended evergreen hedge fund, and we're going to go after it. I think some people, especially when you talk to institutional investors, they want you to be focused, and I think now I am going to be very focused. But just generally, I think some people may think it's weird, but I think everyone else is weird. I think it's important to sort of think outside the box and do whatever you can to sort of win that deal.
Okay, question for both of you on this, which is the competition versus cooperation thing. My understanding, so you just won that deal. You won Scratch Pay because you were going hard, hustling hard. But like, if someone introduces you to a deal, I assume that means like right there, you won't then cut them out of the deal. Is that how you guys both think about it?
Yeah, so from my perspective, like, reputation is all you have. It's a really small sandbox. The second deal that we did from Fund 2, I was actually introduced by a prominent VC in New York. And I was like, I want to write a term sheet on this. And before I sent it, I called them and I was like, what are you doing? I've seen people play dirty and do things the wrong way. I'm a big believer in karma. Like, we don't operate that way.
So we can always introduce people to you, and then
I swear on my life, like, it's written in stone here. Yes, 100%.
Yeah, what he said.
I know. I just never was sure. Like, if you introduce a great company,
like, no, we're not ridiculous.
But if you introduce a great company to some other fund, I wasn't quite sure.
The understanding is I mean,
small sandbox.
Yeah. It's a long game. It's a small sandbox, and if you screw somebody once, it's unlikely that they're going to work with you again.
Exactly. I don't think there's any one deal that's worth your reputation.
None.
Okay, fair enough. Go ahead.
Well, this has been great. I mean, I'm really glad to spend this time with you and get to know you a little better, and I look forward to doing more deals together.
Yeah, me too. Let's get it done.
We thought this show was great. If you did too, please share with a friend, tweet about it, etc. I'm 100% serious that it really does mean a lot to us, and we appreciate it.